welcome to Smart Stock Watch. Today is March 26, 2025, and we're diving into the latest earnings report from GRDN Pharmacy Services, one of the nation's largest long-term care pharmacy services companies. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss GRDN's performance, especially given their significant role in the long-term care pharmacy sector.
The revenue and profitability overview. Let's start with the top line. GRDN Pharmacy Services reported a revenue of $338.6 million for the fourth quarter, marking a 20% increase year over year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by organic growth and strategic acquisitions, specifically Heartland Pharmacy and Freedom Pharmacy. These acquisitions have expanded GRDN's reach and service capabilities, contributing significantly to their top-line growth.
Despite the revenue increase, net income decreased by $2.7 million year over year. What factors contributed to this decline?
The decline in net income is mainly due to increased expenses related to income tax provisions, share-based compensation, and legal and regulatory matters. However, it's important to note that their adjusted EBITDA saw a 30% increase, indicating strong operational performance.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 20 cents for GRDN, but the actual EPS came in slightly lower at 19 cents. John, how should investors interpret this slight miss?
While the EPS came in just below expectations, the difference is marginal. The slight miss can be attributed to the increased expenses we discussed earlier. Overall, the company's strong revenue growth and operational efficiencies are positive indicators for future performance.
Operational efficiencies and future outlook. GRDN has also reported a 14% increase in resident count, reaching 186,000. How does this impact their operational efficiencies and future outlook?
The increase in resident count is a testament to GRDN's successful expansion strategy. It enhances their economies of scale, allowing them to optimize operations and improve service delivery. Looking ahead, their guidance for 2025 projects revenue between $1.33 billion and $1.35 billion, indicating confidence in continued growth.
It's also noteworthy that GRDN has no outstanding indebtedness. How does this position them for future opportunities?
Having no outstanding debt provides GRDN with significant financial flexibility. They can leverage this position to pursue further acquisitions or invest in new initiatives without the burden of debt servicing, which is a strong strategic advantage.
CEO's perspective and strategic initiatives. Fred Burke, GRDN's CEO, mentioned that the company exceeded expectations for the quarter and year. What strategic initiatives are they focusing on to maintain this momentum?
GRDN is focusing on organic growth and strategic acquisitions, as highlighted by their recent purchases. Additionally, their vaccine clinics have become a significant growth driver, capitalizing on seasonal trends and increasing demand for healthcare services in long-term care facilities.
How do these initiatives align with their long-term strategy?
These initiatives are well aligned with GRDN's long-term strategy to expand their market presence and enhance service offerings. By integrating acquisitions and optimizing their existing operations, they are well positioned to capture more market share and drive sustainable growth.
Key takeaways. In summary, GRDN Pharmacy Services has delivered a strong performance with significant revenue growth and operational improvements. Their strategic focus on acquisitions and organic growth, coupled with a solid financial position, bodes well for future prospects. John, any final thoughts?
GRDN's ability to adapt and grow in a competitive market is commendable. Their strategic initiatives and financial health position them well for continued success. Investors should keep an eye on their execution of these strategies in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Guardian's performance in the comments below.